Well, hello, friends. Hey, it's Jamie here with Reece Homes. Hope you are enjoying a great start to your 2025. Let's look back at how we finished out 2024 and then talk about where we're expecting the real estate market here to go in 2025. So, we're going to look at home values, market activity, inventory, and interest rates. So, home values in King County finished out the year 2.8% higher than they did December of 2023 at $802,500 for a median price home. Snohomish County finished out 10.5% higher at $746,000. Putting that in perspective, we've had a phenomenal decade of home price growth in King and Snohomish County. Many years in the high single digits, a few years in the double digits. And then we did have the one reset year where interest rates went up by about 250%, going from 3% to about 7% in 2022. And we did see a little regression during that year, but we got right back on the horse and saw appreciation the following 2 years, including 2024. That's added an average of 10.75% to home prices over that time in King County, and a total of 100% in terms of median home price over 10 years in King County. In Snohomish County, average appreciation has been 9.71% and added 138% to home values over the last 10 years. That is just remarkable, right? In terms of sales activity, what we saw in King County is it was up by about 8% compared to 2023 with about 23,000 units. However, that was down by about a quarter of the activity that we had seen in the normal, which I would call the last 10 years average, right? In Snohomish County, saw again 7.1% up, about 9,500 units, but again, that was about 26% less than that 10-year average activity for Snohomish County, right? That's why things felt a little bit more sluggish. Other important stats to talk about the balance of the market: inventory was up slightly in King County, 6 days to 1 month, still incredibly low. List to sale price ratios were up slightly, but notice that they're a little bit less than 100%, meaning that there's still homes that sell for more than list price when they're well presented and well priced initially. But many sellers are needing to make one price reduction in order to get things sold, or selling right at 100%. Days on market also had increased slightly to 34 days in King County. And similar story in Snohomish County, up by 6 days for inventory, 1.3 months, incredibly low. List to sale price ratio up slightly, and days on market up slightly to averaging 40 days. Now, mortgage interest rates are the driver of this shift in our real estate market. Currently, in early January, they are 6.85%. We expect those to probably trend a little bit higher. We've got some positive economic news that we've been hearing in terms of jobs reports and economic activity that will probably keep us a little bit more on the inflation watch, right? Well, we finished out in December at 6.81%, and that was about 0.2% higher than December of the previous year in 2023. And we saw a 12-month peak of interest rates back in May of 2024 at 7.22%. And we saw a 12-month low at 6.08%, basically the week before the Fed started cutting rates. And the reason that we saw rates increase is that we saw really positive economic news through the rest of the year. And that put us on inflation watch in terms of just making sure that we didn't see a rise of inflation from its 2% to 2.5% to 2.9% rates up to 3 and 4% that we'd seen in the previous month. So they're just being a little cautious that way. Now, it's important to know, and this chart is a little bit hard to see probably from your phone or from your computer, but you can see this on our website. This is the last 50 plus years of mortgage rates where we've averaged about mid sevens, 7.25, 7.5%. The orange band here is the range that we saw over 2024. So right there in the average, and certainly not as attractive as the 10, 20 years previous to us, but this gets us back to normal mortgage rates. And this is now the predicted range for 2025. If you saw some of my briefings in October of last year, that range was predicted to be a little bit lower, but we've been seeing better economic activity, no recession, soft landing, all of that, which has made us a little bit more cautious when it comes to interest rates. Now, when you listen to great economists out in the market right now, what they're predicting is that the long-term mortgage rate. The new normal that we're likely going to see is going to be in that 5% band or so. Might dip a little bit below 5%, but that's many years from now. But we're really looking at this likely future range is probably going to arrive sometime in 2026, 2027. The lowest rate that I've seen predicted in 2025 is down in the low sixes, but certainly not with a five. So what's next? Similar interest rates. We're probably going to see interest rates ranging between 6.25 and 7.25%. Early on, the first quarter or two, we're probably going to be closer to 7.25. And then that's where, as we get to Q3, Q4, depending on how the economy continues to evolve, if it evolves as predicted, we're probably going to see that 6.5%, maybe a little bit lower than that, right? More homes for sale. All economists expect that there are going to be more people who are going to get into the market as they understand that these interest rates are really not going down to 5 and 4% anytime in the near future. And so they're finally choosing to make their move. And then we're going to see moderating appreciation, right? We're just going to see, because more homes become available on market, we're still going to see appreciation because we're just not building enough homes to meet the demand. But we're all going to see more supply to meet the demand that we have in the market. And what we're likely going to see in terms of how it's going to feel is it's going to be more balanced as we are in that higher 6%, lower 7% range, and then back to significant competition once we get below 6.5%, and we really activate a lot of people who are jumping back into the market. And so that kind of creates a point of opportunity for those who don't have the strength to be the winner in these really high competitive environments to take action now. Yeah, mortgage rates will be a little bit higher, but you can also refinance in the future. So what to do right now? Well, we're in the new normal, right? The new normal is developing. We're expecting it to continue this way. So if your home is too big, too small, too old, if you're just not happy with your home and you want to make a shift, if your commute is too long, if your neighborhood isn't ideal, if you're tired of paying your landlord's mortgage, being a renter, and you want to start to develop wealth through real estate ownership, now is the time to take action. Because what you'll see in the other posts that we have in our newsletter here is waiting is expensive, nor is it fun. If you're unhappy with your home, it's not fun to come home to a home that you don't like every day. So if any of these things apply to you, we'd love to chat with you, talk to you a little bit more about the market, and see if these times of opportunity are something that you'd like to take advantage of. Hope you're enjoying a wonderful start to the year. We wish you the best in health and prosperity and joy for this year, and we look forward to talking with you. Thanks for watching.